Hello guys, welcome to today's midweek forex and stock market review and analysis. The market from the start of the week has seen high volatility before and post the Fed rate hike announcement and its continued commitment to tackle inflation, while the Bank of Japan maintained its aggressive bond buying program. From a technical analysis angle, we've seen the market either broken out or reversed from key price levels. But before I dive into what I have for you today, remember to click on the subscribe button, like and share this video. And I would also like to read your comments. Be sure to get more insight through and educative videos from us. Now let's dive into what I have for you. So in the next few minutes, let's just look at what we have. The Dow Jones Index actually has been on a downtrend after a breakout. And yesterday, which was 15th of June, we've seen that post the Fed announcement, the Dow Jones Index actually declined by 1.96%, while the S&P Index actually appreciated slightly by 1.46%. The Nasdaq Composite Index gained 2.5%. It has been, from a technical angle, we've seen the Nasdaq broken through the trend line, this descending trend line, which was as thin as a buying zone, it's a demand zone. Now it broke through it, so I think we're still in a downtrend for it. While the Dow Jones, we are still in a downtrend on the Dow Jones, because that's broken through this pennant trend line, the pennant pattern, and now it's facing a continued downtrend. The S&P also broke below this trend line, and we've continued to see it on a down level. Let's look at the dollar index. The dollar index and its reaction, and how the market reacted post the Fed. So for the dollar, we saw the market fell. I sold into the dollar yesterday 15th, and it actually declined by slightly by 0.6%. So is it a complete reversal from a technical angle? I don't think so. We've also noted that the dollar has been an uptrend. It's significantly been an uptrend, and we saw a correction to this 50% Fibonacci retracement of this immediate uptrend, and it's resumed. You could check our video, our previous week's video, where we did analysis on the dollar. So there we expected a continued buy in the dollar. So which it did, and in the first half of the week, Monday, Tuesday, the market slightly closed above the resistance level of 104.98. Now, post the Fed announcement, we saw a decline, like bearish engulfing pattern. But would we say it's a correction, or would we say reversal started? I don't think so. I think the trend would continue on the bullish side. So for the dollar index, we expect a further upside move in the dollar index. Let's take a look at some major currency pairs and take one or two stocks. Then we close for the day. The EUR US dollar, which is interesting. In our previous week, we've maintained a sell by us on the EUR US dollar. We've seen that we've always maintained that it has been on a downtrend. And we were looking for a way to go short, and we highlighted this supply trend line, and we noted that as long as price did not break above this supply trend line, we expect a continued downward movement, and which it did for the past couple of days. So it has been on a downward movement. And the interesting thing about this supply trend line is that there is both an historical and dynamic resistance level. When I say dynamic, we're looking at 50% Fibonacci retracement level, at 1.0766 and historical level at about 1.0757. So we gave us further conviction that the euro would trend down. Now, the downward movement in the euro made some form of resistance, and when it got to this support zone of 1.0349, so it made a bit of resistance when it got to this level. The question we have to ourselves, is this a significant level to behold? I think yes, it was. So let's go over to our weekly frame and zoom out. So we see that this zone is also an interesting level zone to look at. So you would see that this is very interesting. So we expect a bit of profit taking around this zone, support zone, which it did, because that's from 2014, 2016, and back in 2021, then 2022. So we expect some form of profit taking, which it did, and the market reacted as expected. Would we say there's a reversal? No. Would I say a possible correction? Yes. So I'm expecting like the market to either continue the downtrend, and this is what I'm looking forward to seeing. Actually, a breakout above 1.0474 of the zone. We will like to see the market back to retest the breakout above this zone. That is when the price close above this zone on a daily, at the end of the trading day. We expect the market to go to touch the 1.0632. But if it doesn't, and we see a bearish close, then the likelihood for a breakout below this support zone, the probability of it breaking out is high. So for the euro, we expect some form of consolidation and a further breakout below the support, because we established that the trend is a down trend. Another interesting period that's giving me enough significant profits so far is the British pound US dollar. Now we also maintain the same bias that the British pound dollar is in a downtrend. So we've seen the British pound US dollar traded in a downtrend, and we had some support down resistance zone drawn around this level, and we saw price reacted around 61.8, which is currently price supposed to be 30.2, but I tried it 61.3 because I want to pick out my Fibonacci extension zone. So, and we maintained a sell bias. So thus far, we sold at the break of this neck line. If we dive down to a lower time frame like a 4 hours, which I use for my entry. So now we did a sell around this. I'm expecting it to continue, which it did. And interestingly, a break below the support zone. We saw that on Monday. So, and on Tuesday, it went to this our first level profit taking zone, which is our Fibonacci extension level. And it was where we took our profit, and what we were expecting is that the market should correct slightly, then resume the downtrend at this 1.2155. While you break above this, we'll likely see the market get to this Fibonacci retracement zone of 1.2402. So, but we want to maintain our sell by hours. Importantly, also for the British pounds, is that the Bank of England would make its rate announcment later today at the 12:00 hours. So we're expecting like what we're gonna do is we're gonna wait till after the
to see how the market responds to the announcement, to the rate announcement. Then we will do a sell. We'll probably go to direction, but we're looking at a sell. We're looking at to buy when the market is corrected. So sorry, to sell when the market is corrected a bit. So wait for what the market will do at the end of the day. Another interesting, let's take a look at one more major currency pair, which is the USD Canadian dollar, which has strongly been on an uptrend for a couple of days, for about 4 days, strongly in an uptrend, so steep uptrend. We've seen that post the Fed, we saw the market declined slightly. Why this also note this currency pair also has important level around this zone. So expectedly, we expectedly the market actually we saw some seller from the buying position, so it closed out of some buy. So what do I expect? I expect to go long because I have a bullish bias on it, but I expect it to decline a bit, then take to time my entry for a buy. Before I go out, before I close out, gold actually is trading within this rectangular level, support and resistance. So it's actually traded within a range. What am I expecting to do today? I'm going to take on this pair, the British pounds, Japanese yen. It's a pair I'm actually looking at to trade today. So what am I going to do? How I'm going to be used? So we've seen that the British pounds, Japanese yen has been in an uptrend from 155.57 to as high as 168.70. So we've seen an uptrend in the British pounds, Japanese yen, and we saw a correction to exactly where the market reacted around the 50% Fibonacci retracement level. We had a further conviction that it is there's an historical level support zone, resistance now turned support. So there's an historical resistance turned support. Now, why don't we stay post the Fed, the market closed bullish? We saw the buyers in the market. We didn't take any action. We were expecting to see something interesting. What am I looking forward to see? I'm looking forward to see a breakout above this 163.68 on a daily time frame. By the end of the day, it should close above it today. But if it doesn't, we expect for it to close above to take it further to have a conclusion that the trend has started, has resumed. So it's moving a continuation of the uptrend. Alternatively, if at the end of today, remember there is a rate announcement from the Bank of England. If at the end of the day and it closes back below the 50% Fibonacci level, then I would gladly go short on this currency pair. So I'm holding tight. Being patient is also part of the game in trading, the world of trading. So I'll be patient enough to see how the market reacts at the end of today. Before I close out, let's just take a look at one or two stocks. Then I close out for the day. Interesting stuff I'm actually looking at is I have a lot of them. It's Pfizer, a pharmaceutical company. Pfizer thus far actually reacted around this supply chain line. I think on Monday, if I'm right, on the 8th, yes, on the 8th of June, which was about on Wednesday last week. After it touched this, so there is a lot of element of supply, and we saw Pfizer decline from 54 zone down to 47 zone. Now, interestingly, I also have a demand and trend line drawn on Pfizer, and coupled with an historical price level, support level drawn also. So when we saw a break below this demand trend line, I was looking forward to a breakout below the support trend line to have a conviction that the downward movement has resumed. the sell-off is really in place. But on Tuesday, the market had a spinning bottom, just a spinning bottom, and on Wednesday we have a bullish close. This could be like Morning Star. This is a technical pattern. So, what am I expecting? Like, I'm expecting to buy. I'm not going to buy the market open. I'm going to buy above on the market to be in to go above this trend line, demand trend line. So I'm going to be looking at something around 49 to buy. I do the stock options. So I'm going to do a buy call. I'm going to do a buy call around it. So on Pfizer. So I think it's a good stock to go long on for the week. So far so good. We've been able to review the market. We've been able to look at the index, look at some major currency pairs, look at the stock market index, look at one or two stocks too. I believe that this week, in the remainder of the week, we expect to see continued volatility in the markets. I want you to trade with carefully, take into consideration risk and money management. These are elements that make successful trading. Please ensure that you trade, your money management and risk management is sound enough and sustainable in the market. For the remainder of the week, I wish you a profitable trading week. See you at the end of the trading week. Thank you and God bless.